Okay, we are live streaming. Hello, everybody. Hello, welcome to the 10K Project. We are the largest community of investors who actively fund Black-owned businesses. We have a special guest with us today, Darshan Kendrick Esquire, who is here to talk about equity crowdfunding. That's what she specializes in. And we're going back a little bit to our roots, Tawana, to talk a little bit about equity crowdfunding, how it can help the Black community, the things that we do with the Bet on Black pitches. Darshan is here to answer a whole bunch of questions and really just kind of, again, just kind of let us see like how we can actually take the legislation that was provided to us and build wealth within the Black community. So, Darshan, welcome.
Thank you so much for having me, and hello to everybody who is joining you live or otherwise.
Yeah, so what I want to do is toss it over to Tawana to talk a little bit about what the 10K Project is and talk about the Bet on Black pitch, Tawana.
Absolutely. So thank you for anyone joining us for the first time. And, you guys know, to our members joining us, you guys know how much I absolutely love you. So thank you guys for tuning in again this evening. For anyone new, in addition to helping our investor community members find opportunities on how to build wealth and find their niche in this wealth building journey, we also lend our support to Black founders who are raising money via equity crowdfunding. And we do this by bringing them in front of our community of investors and having them share with us their project in its entirety, and so that they can, explain what they're doing, what plans they have for the business. That we really talk to them about future plans, not just the now, right? Where do you see this business in 5, 10 years? How are you going to exit? I mean, we're asking them everything there is to ask them about these businesses in order for the investor community to determine if they want to add this to their portfolio. So we bring them in front of the community. We do it every Tuesday night, 8 p.m. Eastern time, where we have them present to us their project. And as an investor community, each individual investor is making the determination solely on their own if they want to add this business to their portfolio. We are simply the platform upon which they come together to meet. I often kind of joke that it's kind of like a great matchmaking service, right? We bring them together, and if they decide to go on a second date, that's their business, right? but we expose them to one another. We do everything via the equity crowdfunding platform that the founder is already associated with. So there's no money exchange from an investment standpoint to 10K Project. We truly are bringing the two together and the investors deciding if this is a great investment opportunity for them. The thing I love about the pitches the most is that it is an intimate evening. It's not a competition, so the founder doesn't have to fight, to be heard or to be seen. The night is about them. We're here because of them. And it's our way to celebrate each and every founder that comes to the community because they have amazing, innovative ideas. Some of these ideas will go on to be, billion-dollar companies. And some, unfortunately, will never be heard of by the general public, even though they are amazing, because they won't get the capital that they need. And that's really why we're here. That's really how the 10K Project got started, right? One day, Cherie was making a statement, and she said, if it's kind of ridiculous that Black founders have to go into banks and beg for money, right? If 10,000 of us got together and gave $100, we could fund Black businesses over and over and over again. That's how we got here. And so we know that with the right funding, these businesses will go on to do amazing things. And unfortunately, without it, some of them won't make it. And so, the 10K community has done an amazing job thus far for founders who have come to our community to raise capital. We've been doing the Bet on Black pitches since the first Tuesday in March of 2021. And we've done that consistently every week. And so we are probably at a little over 70 founders, I think, at this point, that we've helped raise capital, all via equity crowdfunding. We like the safety net of the SEC, right? So we stay in that realm right now. We have a lot of companies that are not raising money via equity crowdfunding, reach out and say, oh, can you help me raise money? If you got an equity crowdfunding campaign, we can, right? And that's where we feel comfortable right now. We believe that that industry is such a growing industry, that they're making great strides just over the last couple of years even. And we really like the extra oversight from FINRA and the SEC, and Deshawn can talk a little bit about those agencies when she talks about kind of how we got here in the industry. But if you're not already a 10K Project member, if you're just here joining us for the first time this evening, you do have to be a member to benefit from the Bet on Black pitches. It is a member-only benefit, so please consider joining us. It is a good opportunity for you to get a first look at some of these campaigns. There are, I think, over 70 equity crowdfunding platforms now, and to go on each one and to find Black founders that you're wanting to invest in is time consuming, trust me, because that's how I found you. That's how I find all the founders we bring. So I know how time consuming it is. If each of you did that for yourself, you wouldn't get much else done. And so one of the benefits that we bring is that we do that sourcing for you. And so we're bringing the best of the best in front of you so that you don't have to search for them. All you have to do is show up, listen, and decide if they fit in your portfolio and meet your future financial goals that you have for yourself and how you decided for your family to invest. So please consider joining us. The10kproject.com is our website. You'll see membership information there. We'd love to have you be a part of the community. The Black founders that we support would love for you to be a part of this community so that one day they will get to present in front of you as well. So with that said, thank you guys for joining us again.
And what's tomorrow night's pitch?
Tomorrow night's pitch. So for those of you who are new, we don't tell you the company because we want to surprise you, right? We want you to show up and be surprised. But tomorrow's company, let's see, what's a good teaser for them? Let me think about the teaser for them and I'll come back. Okay. And share that later. Well, before we leave, I'll think about a good teaser and we'll share it. But all the founders are amazing, right? I say that every week. I know people are like, she says that every week. I do, because they all are. It's not a joke. All right, Sherry, go ahead.
I'm laughing because you're right, though.
I know. Every time I say it, I think it to myself, but I'm like,
you're like, I know how to pick them.
That's
the reason why I'm laughing.
And some of them pick me, right? I mean, we've gotten to a point now where the community, you guys show out for some of these founders that they're talking about us, right?
Yes.
And so now they're calling us. I'm filling up the calendar, month after month, and I'm not as busy searching through the portals as I used to be when we started, because now I'm filling the calendar because they're coming to us. So, and that's all because of you guys, the community. When you guys show up on Tuesday night, you invest in these campaigns, you help these founders get to the thresholds they're trying to meet. Because one of the things the portals do is they make them meet certain metrics or thresholds, right? Before they'll open up their larger membership body to them. So they get you to come to the campaign, to their portal by saying, we've got 500,000 investors, right? But the founders don't get access to the 500,000 investors on day one, right? They may get access to 50,000 of them day one, right? Or maybe even less than that. They have to raise a certain amount of money before they can get access to the 500,000 investors. And so we have been very successful in helping founders get to those thresholds, right? To where the portals are now opening up their larger book of business from an investor standpoint to them. So you guys are doing great work. And so thank you, because you're definitely making my job easier, because it's not fun clicking on every single campaign in 70 portals trying to find somebody Black. Researching the business to see, is it a good industry? Does it sound like it's good? Is it diverse based on what we've had already presented? So the first thing is finding the Black founder. Then it's researching to see if the business model, the kind of the guidelines that we've put in place. So thank you guys for showing up and showing out week after week on the Bet on Black pitches.
Well, Tawana does a great job. She does a lot of work behind the scenes, and everyone throw an exclamation point in the chat for Tawana as a thank you for all the hard work that she does, because she really does a lot of work behind the scenes to present, great founders to you every Tuesday. So with that, I want to introduce Darshan Kendrick, Esquire. Again, she is an attorney. She is an attorney actually that specializes in equity crowdfunding. She's a securities lawyer, specifically, is what she is. And she helps companies raise billions of dollars in private investment funds by advising on and securing regulatory legal compliance and completing company documents. She is very much an advocate for Black people capitalizing on equity crowdfunding. And I've been following Darshan for years in LinkedIn. And if you are in Georgia, you may recognize her because she just won re-election to the Georgia House of Representatives. She represents 54,000 Georgians in East DeKalb and South Gwinnett. So if you live in those areas, you got your representative here as well, talking to you about equity crowdfunding. So with that, Darshan, why don't you tell everyone just a little bit more about yourself and how you actually became a securities attorney?
Well, thank you. Thank you to you and Tawana for having me, and for all your guests that are on and committed to being on this call. I'm very excited. As you stated, I love discussing equity crowdfunding because it democratizes access to capital, which is really what I'm all about from a personal standpoint, but also from a professional standpoint. So I was born here in Georgia and went to UGA went to Oglethorpe University for my undergrad. So I have 2 degrees there. Went to law school at the University of Georgia School of Law, and then have an MBA from Kennesaw State. And I have a Series 65 as well. So I'm also a registered investment advisor here in the state of Georgia. And I do some arbitration for FINRA. So I do all things capital markets. I just love the space. But I got into this area because I knew I didn't want to litigate. I wanted to be a transactional lawyer. I was raised by 2 entrepreneurs. I grew up in an entrepreneurial household, started, a side business when I was in high school. So I've always had an entrepreneurial spirit and raised around people who took zero and made it into something. But I also saw the struggles that my parents went through of finding legal counsel that cared about them, that knew their background, their history, some historical context. And so I decided to become a business attorney, and I specifically decided to become a securities attorney once I started learning a lot more when I was getting my MBA, just about how lack of access to capital and how much capital is being distributed to women founders and to Black founders. So the focus of my firm is not only to help companies raise billions of dollars in private investment capital by letting founders focus on growing their company and leaving all the regulations to us, but I specifically like working with Black and brown and women founders because they have particular capital raising needs. And so I enjoy the work that I do, and looking forward to any questions that anyone may have, because this is definitely a subject that needs to be talked about more and understood more, even though the Securities and Exchange Commission is always coming up with new rules and regulations. I try as much as possible to highlight those whenever possible.
So I guess the question that I would have, let's kind of jump in the deep end here, is about equity crowdfunding in Black America. And when Tawana told the story of how I was saying for 3 years, if 10,000 of us came together and we put $100 in, that's $1 million. We can invest in our own companies. And that was before I even knew what equity crowdfunding was. So talk to us a little bit, since you're on the inside, about why the Black community doesn't know about this. What can we do to kind of, because this is revolutionary for our community. I think all of us would agree, if more of us knew about it and actually used it because we're always talking about cooperative economics and things like that. Where do you see the breakdown with regards to, people knowing that this is even an option?
Well, a lot of it really is education and being in the room, because yeah, a lot of times I am the only Black person in a room, or the only woman in the room, or if I'm lucky, the only Black woman in the room. And so a lot of times where these new laws and regulations and new initiatives are being discussed, unfortunately, we are not in the room. And so I try to make it a goal and a purpose as much as I can to highlight the fact that equity crowdfunding is out there. If you live in the state of Georgia, we were one of the first states to implement equity crowdfunding, even before it became such a big deal on the federal level. So Georgia actually has a specific intrastate crowdfunding exemption for Georgia-based businesses. So just not a lot of people know about it. And so I try to work with the Secretary of State's office to get the word out. And the Secretary of State's office has had some seminars where I've been on the panel to let people know about the Georgia intrastate crowdfunding option, as well as federal crowdfunding. But a lot of times it is just lack of knowledge. So a lot of founders might think that debt is the only way, that I have to get an SBA loan, or I have to, do this or that, or I have to get money, from family or friends, but not doing it the correct way, which is through equity crowdfunding, just sort of getting money without any documents, any regulations, or anything like that. So it's a gap in knowledge. And I've learned over the last year, there are a lot of, especially in the Caribbean community, that are doing equity crowdfunding, but it's like the illegal version.
The susus.
So again, there's a gap in knowledge, and then on the other side, there's people that are doing it that are not, within the legal confines of doing it the legal way. So, a lot of it is just a gap in knowledge. So, we all have to do our part to sort of educate as much as possible, because the only things that seem to get a lot of attention is if somebody raises $100 million venture capital fund, right? And you're like, that's great, but for people who don't need $100 million, right? Right now, there's a much easier path to get there, and you just have to get out in your community as much as possible and tell about great organizations like the 10K Project and others out there, and hope that it spreads. So go and tell people about the fact that equity crowdfunding has been here for over a decade.
Right. Yeah, it's interesting because when we started, and I know many in the community know this, when we started, we were going to be another portal, right? There was only one Black-owned portal at the time, Lynn Smith with Buy the Block, and Black founders were being turned away without a lot of explanation from some of the bigger portals at the time. This was pre-George Floyd, and we were going to be a portal. And as we were building our crowd, trying to have an audience that would be able to support the Black founders, the more investors we talked to didn't have a clue what equity crowdfunding was. They didn't know they could get the early seat at the table. They associated everything we were kind of talking about with GoFundMe, trying to get them to understand this was not GoFundMe, like you could actually have some ownership. Then talking to the founders, again, more of them didn't know. And so as a company, we had to take a really hard look at what we were trying to do. And the community at the time, I love that they stood by us, because I know there was some concern because we had to pivot. What we decided was, at the time, the world didn't need another portal. It needed education for our people so that our people could know this was a way to get capital. And the portals are, as you know, the rules are very clear on what you can and cannot do. And the lane we were trying to go in was not what FINRA had in mind, right? Like, you can do this much education, but you can't do this much education, right? And we were trying to do this much education for our people. And so I am grateful that we were able to pivot And the community stood behind us while we did so, because I know they were so excited about the potential of us being a portal, and so were we. But when you talk to 500 founders and only 10 of them know what you're talking about, that's a problem, right? You got to reconsider where you're going to be the most useful. And we really think that the space that we're in now, where we can educate the community on how to build wealth and expose them to all of these alternative wealth building opportunities, at the same time, raise up and lift up the Black founder and support, this is a good spot for us. And so I'm grateful for the pivot. Luckily, the portals have changed some of their behaviors, and they are, welcoming more and more Black founders to have a seat at the table on their platform. So that's good as well.
Yeah, the other two reasons why we pivoted was, number one, if we were going to be a portal, then it was not only about educating the crowd, but bringing the crowd. And we discovered that a lot of the Black founders didn't naturally have a crowd. Those who had raised a lot of money before, your Dawn Dixons, your Vanessa Braxtons, they already had a crowd. Lamar Wilson already had a crowd of people that they had built on social media. But most of the founders just didn't have a crowd. And one of the things we were concerned about behind the scenes was, because you can have a portal, and if the entrepreneur doesn't have a crowd, then you're not going to get paid anyway. And because we were going to be restricted on the education we could do if we were a portal, we said, well, that doesn't make sense either. The final thing is, we want Black people to leverage equity crowdfunding a lot like Jason Calacanis, who is a very well-known angel investor, leverages his portfolio of companies in order to build wealth. These angel investors out here are making, an average of 35 to 45% on their money every year once they get above 100 companies in their portfolio. Well, if we're not able to educate the community on, it's not just about investing in one business, it's about building a portfolio of these businesses, then the community would invest in two and say, well, I lost my money, I didn't see anything from it, so I'm abandoning it, So there were not a lot, those are the three main reasons why, in the back end, we decided to pivot. Do you have any thoughts with regards to that? What are you finding, Darshan?
Yeah, so it's it is making sure also, in addition to democratizing access to capital, is making sure you have those people at the table, right? So we can talk about founders being able to access capital, but on the other side, we need people who look like us who are giving out the capital, right? And so it's a two-pronged approach, which is really one of the reasons I became a registered investment advisor, is to your point, to get people to understand that investment is, you almost have to think about it like venture capitals and private equity funds. They will invest in 10 companies and 7 of them are going to fail, right? So it's a numbers game, right? As far as investing and doing your homework and investing in as many companies that you can, knowing that some of them are going to fail. That's just the nature of businesses, especially if they're startups. But you come down with a strategy, an investment strategy, which is really, really important. And you stick with that strategy and you do all your due diligence, and then you make that, you make that investment. And so it's two prongs, right? You got to have founders that have access to capital, but that access to capital needs to look like us in a shared community, right? Keeping it all in the family, keeping the money flowing. So we really have to work on getting founders to the table, but also getting those investors on the other side of that table that look like us, because they just can understand a lot better.
Right. So we have a couple of questions here. Mark asks, could it also be that oftentimes the industries selected by people of color lack scalability or center many times around hospitality, entertainment, etc. Tawana, I'd love to get your point of view with
Mark,
regard to
you'd be
this.
surprised. I say no. I think those are the ones we hear about, right? Like Cherie used to have this joke, like, okay, we're not gonna have a bunch of barbecue sauces on Black Pitch, Tawana, right? Because you see a lot of food, a lot of t-shirts, right? You don't see the innovation, right? Because they don't have the money, right? So they don't have commercials, right? They don't have $1 million worth of social media ads. They don't have the money, so we don't know about them. Mark, I'm telling you, no. The majority of these industries are in amazing state. Black tech is huge right now. I mean, it's huge. I got a gentleman also, his name is Larry Mickens. The name of the company is Over the Top Ladders. He is changing the ladder industry. But he needs $1 million to make 40,000 of them. Where's he gonna get $1 million from, right? To just make 40,000, right? I mean, it's only 40,000 ladders. Seems like a lot of money. $1 million seems like a lot of money, 40,000 ladders. But that's the deal he's got on the table. He needs $1 million. We're never going to hear about Larry if he doesn't get that $1 million. And when I tell you this ladder is something special, so no, it's in all, and we exist everywhere. Black excellence is everywhere. But the marketing dollars are not there so that we all hear about it. So many times we've had founders come and there is a version of them that came out later. A good example, we all know Clubhouse, right? Well, do we know that before Clubhouse got the money, there's a Black founder, Allende, right? What's the company name, Cherie? Help me out.
Needle
was out first, has more tech features than Clubhouse, but Clubhouse got funding. Needle didn't, right? Needle tried to raise money. Their first time around, I think he only made like 80,000, 60 or 80,000. I can't remember the exact number. Second time around, he made a little bit more. But by that time, Clubhouse is a household name because what they get, millions, like 20 million or something ridiculous like that. Another situation, Patreon. Patreon, we all know Patreon is kind of that behind the paywall system where you can bring your social media crowd behind the paywall, right? You don't have to keep them on Facebook and all of that. Well, DipSnaps is a Black company, was out first, right? Didn't get the funding, right? And so now we know Patreon, we don't know DipSnaps. That story is, I hear it more and more and more, and they've got the receipts to show they were here first, right? But we just don't hear about them. So I'm here to say, Mark, I don't think so. I think we are in all the industries, all of the profitable industries. We just have to get our founders in front of the right people. And we are the right people, in my opinion. So we've got to get them in front of us. You've got to hear what they have to say. Do your due diligence, right? I say that 3 times. Do your due diligence. Do your due diligence, because I'm not doing your due diligence for you. You got to do that for yourself, right? Right? But then make a decision, right? Because that's what they're needing. So Mark, I used to think like you too, that it was just t-shirts and barbecue sauce, but no, they are out there doing amazing things. Some of these business ideas, I leave the conversation with my mouth wide open, like, how did they think of that?
Yeah. Darshan, do you have a comment with regard to the question?
I would just echo what Tawana said about, that's why access is so important. Because even if our companies are not the first to market, a lot of times products that do something different and can scale are just ignored by the capital raising world. Many of you might know about Greenlight, which is an app for kids. I use it for my niece, and it teaches her financial literacy type things. I can do allowances and she can save. And anyway, it's supposed to be an app to teach financial literacy to kids K through 12. But about a year ago, I found out about this Black lady who started a similar app called Goal Setter. And so I downloaded the app and let my niece play on it. And she actually likes the Goal Setter one because it gives quizzes in order for them to be able to access their funds. So it teaches them more than the Greenlight app does. But this young lady is still, trying to find funding. Whereas, Greenlight, they are, I think they're on their second or third round of raising millions of dollars. And a lot of that, we know has to do with the way that those founders look, but also because of the team that they have as well. So they have, former CEOs of American Express and all these fintech type companies. So the other thing that I would say is when we're talking about founders getting them access to capital, that not only means like funding, right? Like fungible capital. That also means learned capital from human resources, right? So that founders can build their board of directors, so they can build their mentors, so they can build people in the industry. And all that does is help you stretch and get in those rooms even faster. So, when we talk about capital, it's not only money. This is human capital as well that we really need to focus on, because that is one of the main reasons why these companies are able to scale. But to your point, Tawana, there are plenty of companies. I work with a lot of companies in the tech and lifestyle and real estate space. So there are plenty of Black companies that are out there that are not, doing maybe child care services or restaurants, which are riskier type of ventures. There are plenty of them out there that are doing things that are scalable. But for whatever reason, we associate Black people doing restaurants and T-shirts and doing hair products and salon stuff. But there are plenty of them that are out there doing it.
Yeah. The only thing that I will add as somebody who has written business plans for many years and talked to a lot of Black founders, there will be Black founders who will have revenues coming into their company currently, who will go and sit with a venture capitalist or an angel investor who will say to them, I've never seen a Black person make $1 billion or get $1 billion valuation. So they will be bypassed in exchange for a white person, true stories, a white person who does not have any revenues with a similar idea. They'll say, I've never seen a Black person do it. Well, now there's Calendly. Now there are starting to be other companies where Black people have grown those businesses up to $1 billion valuation plus. I haven't seen a Black woman do it. Black women are starting to hear this. So I often said when we first started the 10K project, this is actually an excellent time for us as everyday VCs. That's why we actually coined the term and also trademarked home of the everyday VC, because if other people aren't funding us and we have an opportunity to make money from our own entrepreneurship on the investor end as well as the entrepreneurship end, that's actually great for us before we are squeezed out of being investors in these companies. So there's a couple
and that's very likely to happen, Cherie, because when you think about equity crowdfunding, VCs are very interested in this space, right?
Mm-hmm.
We had Arlen Hamilton come pitch to the 10K project, right? One of the best VCs out there in the game. But VCs are now very interested in the equity crowdfunding space, which is good for founders, right? Not a bad thing for founders, but what that means for the everyday investor is if they're going to come here now into our backyard, right? We finally get access. Now they're going to come here and drop their millions of dollars, right? and then we may not have a chance to get in on some of these deals because the founders only have so much money that they're able to raise based on what they say they need and based on their, the financial finance that they provide and all of that stuff. And so it's very possible that a VC can come and drop $1 million on a campaign or request the campaign come down early so that they can give them the funding that they need, which is why when we have pitches, I always tell you guys, if you're interested, don't wait, right? It doesn't matter if the campaign has 97 days left. If you're interested, don't wait, because you don't know when they're going to get the monies that they need. And I've had several founders come to me sometimes before the pitch and say, before they were scheduled, and say, Tawana, unfortunately, I might have to back out because I got a VC to give me money, right? I've also had a couple of founders say, I'm taking down the campaign early because I got the money I needed, but they don't want me to take it via equity crowdfunding. They want to give it to me off portal. So I've had both of those scenarios happen. In some of those situations, we missed out on some really cool business ideas, right? And business models that we won't get a chance to invest in because, or they decide they're only doing accredited investors, right? And they take it off to do that. So when you see something you like that piques your interest and you do your due diligence, right? And you find that it meets the criteria. If you don't know what due diligence is and you're a member, we've got some resources in our Knowledge Center where we tell you kind of the questions to ask. We walk through the Form C, which is the legal document that founders fill out for the SEC. Like we give you education here in the 10K Project too. We don't just kind of present this to you and leave you to your own, just figure it out. We provide you with the tools that you need to help you make wise decisions, but it ultimately is your wise decision that you're making. But you got to act. We have to activate, right? We can't just sit. We have to activate because opportunity is there and access is there, but only if we take it, only if we do something.
Okay, so Darshan, we have a question in YouTube asking what is the name of the app again for the kids' savings and literacy? Can you give that information again?
Yes, so the white-owned one is called Greenlight.
We don't want to know the white one. You tell us the black one.
The black-owned one is called Goal Setter.
Goal Setter.
GOALSETTER.
Yeah,
okay.
Hold on, let me make sure that is.
And that question was from Shawnette. So thanks, Shawnette. Jessica also in YouTube is saying that Honor Your Flow was another great one. FemTech. So yes, it was.
It was.
Yes.
And unfortunately, she didn't get what she was looking for. I think her campaign is still out there, but that was one that I was very, very impressed with. But the other thing is, I think a lot of people have to obviously connect to the idea, right? And I would imagine some of the men probably shied away from feminine hygiene products. Although it was great dialogue that night of the pitch, but I was disappointed she did not raise as much as she would have liked to, because it was another amazing idea.
Yeah. So Jen has a couple of questions in the Q&A, and I want to answer the second question first. So Jen is saying here, I am in an MBA program and taking a finance module right now. I'm struggling to understand the topic. Are there resources to help break it down further and make it less intimidating? So I was looking actually for a graphic and I couldn't find it in my files, but overall, Jen, and this is a great question, so I'm glad you asked it. Here is how equity crowdfunding works. Okay, you have a company that will want to raise funds. And for simple math, let's say they want to raise $100,000, right? Okay, so if they were to put on the internet, I'm raising $100,000, cash out me $100, anybody who wants to participate and give me money in exchange for shares in my company. Click, clink. Literally, that is against the law. Okay. So the Jobs Act of 2012 was signed by President Obama. It was March 2016 was actually when the law was pushed out to the general public that said, yes, you are able to raise that $100,000 as an entrepreneur if you do it through something called equity crowdfunding. It's also called Regulation CF. Okay. And it says you can raise, now it's up to $5 million per year as an entrepreneur that you're able to raise. But you have to do it through something called an equity crowdfunding portal, which is registered by FINRA and the SEC. So there's government regulation over this. Okay. So let's say you want to raise $100,000. We're going to keep this example super simple. And let's say, and you are able to raise this money from anybody. They could be rich, they could be poor. The terms are accredited investors versus unaccredited investors. Accredited investors are, I'm going to put in quotes, rich. Unaccredited investors are just regular people. And people are able to invest any amount of money that they want. Could be $10, could be $25, could be $100, $1,000, et cetera. But we'll keep the numbers simple for this. What happens in equity crowdfunding is the entrepreneur is able to say, hey, I'm raising $100,000. If you want to invest in exchange for shares or equity in my company, you need to come to this portal. And the way that you give me this money is not through my Cash App or anything like that. It's through this portal, right? So let's say there are, was 1,000 of us that give $100 each to keep the math simple. So we're all shareholders in this entrepreneur's company. And we each buy a share for $1, right? So $100,000, let's say that that entrepreneur has sold 100,000 shares in their company. Over time, they're going to take that $100,000 without complicating it. There are fees and things like that have to come out of it. But let's say 100,000 just to keep it simple. $1 per share. I own 100 shares. Tawana owns 100 shares. Darshan owns 100 shares, you know, et cetera, right? And over time, that company does really well. And then they're approached by a Fortune 500 company that says, hey, I will buy the shares in your company from all of the investors as well as you. So it's an acquisition, and I'll buy it for $10 per share. So we, Tawana, Darshan, myself, you, we bought at $1 a share. We get to sell at $10 per share. That is the return on investment. So it's the 10x return on investment for that. So in other words, that is how you are able to make your money back. This is how angel investors do it. Basically, this is how the rich have been doing it for years. Just they add more zeros to it than we would or we can do. But now we get to have a level playing field with wealthier people who have been doing this for years and years.
Right, and Jen, the other way to think about it is before these companies get to the stock exchange, right now, that's when we have access to them, right? When they get to the stock exchange and we go on TD Ameritrade or wherever and we buy shares in a company, right? That has already been valuated extremely high. They have already, for the most part, paid their first line of investors out, right? Their first line of investors have received a great return by the time they get to the stock exchange where we have access to them. What equity crowdfunding allows for is it gives us the early access, right? So we get to invest in them before anybody knows their name, right? So before they're an Apple, before they're an Airbnb, right? Before they're an Uber, we get to know about, right? Because before we knew about those names, there was a group of people sitting in some rooms that knew who these companies were. We didn't yet, right? We were consumers of them before we ever had the opportunity to be investors in them. And so what equity crowdfunding allows for is it allows for those tables to be turned. It allows for us to be early investors first, not just consumers. And so we get to experience the appreciation of the value. As the company increases in value, our stake in that company increases in value. So hopefully that helps you.
Darshan, did you have anything to add?
No, I think you did a really good job. I used to tell people when equity crowdfunding was very, very new, that it was almost like, what was that crowdfunding? It was a rewards-based crowdfunding. Was it Indiegogo? And there was another one that was
Kickstarter and Indiegogo. Those were the two.
So I told them instead of rewards-based crowdfunding, this was actually equity crowdfunding. So as opposed to going on there and getting a T-shirt or something like that, you actually get ownership. But another thing, and another reason why I love equity crowdfunding is, to your point, it gives you access to private markets. What people don't realize is that most millionaires make their money in the private markets, not on the New York Stock Exchange, not in public markets. They make their money in private markets. Why? Because the return is so much higher. By the time you get to the public markets, it's went through so much red tape and transparency and regulation and valuation that is harder to make and scale your money once you get to the public markets. If you can get invested early in the private markets and get that return on investment, not all of them are going to get, that superstar return, but if you invest early in the right businesses, that is where millionaires make most of their money, not public markets. It's always the private markets. That's the only thing I wanted to add.
Yeah, that's the rich get richer. Basically. Now, Jen had another question. We'll get to ask you, Darshan, this. From a psychological standpoint, how do you increase your risk tolerance? It seems like many Black people are inherently in a scarcity mindset when it comes to wealth.
Yeah, that's a whole nother class. I mean, I will tell you, one way is to recognize, which you have already done, that it is a scarcity mindset. That's the first thing, is admitting that it is a scarcity mindset, is a fear that we have, justified or otherwise. But I tell people, when they really start to do investing, the best thing that you can do is to get started, right? Get started small. If you're scared to, invest $1,000, try $100. If you're not at $100, try with $10. If you're not at $10, try for $1 and get comfortable with that process. And the more you are comfortable with the process, the more you will up the amount that you invest going forward. So the biggest thing to get over that scarcity thing is to get started, because you're not going to go anywhere, standing still. So it is going to take time, so you shouldn't beat yourself over the head, right? But as you get more comfortable, as you get into more companies, there are plenty of Black-owned private equity funds, especially right here in the state of Georgia, that are looking for limited partners, minority-owned limited partners. So if you want a community that looks like you, that invests in portfolios like you, and you want to have an assortment of portfolio companies that you can invest in all in once, consider joining as a limited partner in a private equity fund if you're able to. And that way, you are able to diversify your risk, right? And then you're able to also dip your toe more into the investment space. And whatever your comfort level is, just, that next year, instead of you investing 5% of your income, your disposable income, maybe you up it to 7% and just incrementally, go forward. And, when you start getting checks in, that provides a lot of confidence as well. I've heard.
Yeah, I agree. Trying to just doing it first, right? Trying to get into investing and see how you feel about it. But it's really that mindset shift of, I no longer want to just be the consumer, right? I don't want to just keep being the person that buys the thing, right? And really thinking about and looking at the things that we do consume. And what are we getting? What do we really get back? And even the gratification we get when we buy something that's really cool and might be a little expensive, that only lasts for a little while, right? The new shoes, the new purse. I mean, don't get me wrong, there is euphoria there, but it doesn't last forever. Whereas if I invest in something and I get to watch it over the years, right? And again, they're not all going to grow, right? Some of them will fail, and not due to any fault of their own. Maybe the market just isn't right, but some will fail. But if you do it enough, and if you get into enough deals, the odds are in your favor that many of them will succeed. And what if, right, you're in one of those deals? Think about how that euphoric feeling continues, and think about if it translates to you being able to at some point transfer that stock or that asset or that equity to your family, to your children, right? And then it grows to enough that they get to transfer it to theirs, right? Then generational wealth becomes more than just the slogan on the t-shirt. And so that's not going to happen if I buy a really nice pair of shoes, right? It's not going to happen, but it will potentially happen if I invest. So it's really just kind of changing the mindset and looking at your current behavior, making small changes to it, right? So this is not something that's going to change overnight. If you've never invested before, don't go out and spend a whole bunch of money on investments just because you want to be able to say I'm an investor, right? That's not the approach, right? You want to start researching. You want to start reading books on financial wealth building and investment books. Like you want to start educating yourself. If you're not already a member, you want to become a member of the 10K Project, right? Do things that put you on the right path to getting good information, solid information and education that helps you make wise decisions. But that's the first step. That's how you start, in my opinion.
I'm glad that you mentioned, not rushing out and putting a whole bunch of money into any specific type of investment, but actually starting off with education. You and I, Tawana, used to always talk about disposable income. Mm-hmm. So I looked at Jen's question a little bit different. I think that some people, it's not a psychological standpoint. It is that they need to be risk averse right now in their lives. Maybe they don't make enough income right now. So maybe they have other financial needs where that money needs to go to. So that's one of the reasons why we partnered with Freeman Capital, for example, because it may be that you just come to the Bet on Black pitches and listen and participate that way, but you get other things in your life taken care of. Because if we're looking at our numbers as a people, there are quite a few Black people who just don't have the money to participate in equity crowdfunding in the way that they would like. And that may not be a scarcity mindset, that just maybe they're where they are in life.
Just don't have the
now.
Resources right now. Yeah,
the resources.
Disposable income is a must, right?
Yes.
You have to be willing to lose the money.
Yes.
And
the
so
other.
if you don't go into it with at least that mindset, then you're going to be in trouble. You have to know that all of the deals will not do anything. They won't succeed. They won't render a return.
Right. The other thing with equity crowdfunding specifically is that these are illiquid investments. So even if something is going really well, we put our money in and it's the next, I'll say the next Facebook, just metaphorically, right? That doesn't mean we can go, like if we own Nike stock today, we can go and cash out. There are people that are doing some things behind the scenes to make these investments more liquid than they are, but right now they're illiquid investments. Yeah. So again, some of the risk tolerance is from that point of view. And then the other point of view is not necessarily, in my opinion, a risk tolerance thing. It is are we going to get scammed? Let's be real. A lot of us are concerned about people taking advantage of other people, which was why when Tawana and I sat down with the original 5 of us, we wanted to go the equity crowdfunding route because it had that layer of protection of the SEC and FINRA. And I think that by educating people on that and saying, look, the documentation has to be signed and presented to the SEC and FINRA. And if an entrepreneur is going to lie to them, then, I think the chances of them doing that, an entrepreneur doing that, I think are slim. So we want to ask a couple of other questions here. Beulah is asking, does it mean I get a $900 as a return on my money? So yeah, you would make a $900 profit on your money with that example that I gave. Yes, you would.
Beulah, it may take 7 years for you to get that, right? Because it's the long game, right? Yes. So when Cherie talked about the liquidity events, this doesn't happen in 6 months, right? It could be 10 years later, the business is finally sold, or they go public, or whatever, or they scale enough that they're able to pay out their investors, right? It is definitely because you're early, right? It's the early seat at the table, right? So they're still building and growing this amazing business to come. And so this is definitely not something where you could, experience an appreciation over a year or two. Could happen, right? Could happen. But the odds are that it is a longer term philosophy. So yes, that would be your return in Cherie's example, but the time frame obviously would vary.
Yeah. Now I love this next question. How do you get into Twitter if it starts to slip? You, unfortunately, based on what I'm reading, Elon Musk is turning it private. So you're not going to be able to get into it. You're not going to be able to get into it. So, and it's already slipping. So, not financial advice. Dennis is asking, is there a threshold percentage entrepreneurs have to offer in equity crowdfunding? That's a great question for you, Darshan. Is there a threshold percentage entrepreneurs have to offer in equity crowdfunding?
Okay, I'm going to try to rephrase the question to make sure I understand what he's asking. I believe he's asking, as far as percentage of equity in the company, is there a low, like a least amount, or maybe a higher amount that you have to put on the platform for investors?
Yes.
So the answer to that legally is no, right? So there's no legal requirement to say you have to offer 10% of your company on a crowdfunding platform. But that's a different question than business advice, which is, no investor is going to get excited about 0.00001% of your company, right? So the business question is a separate question from the legal question. And as been stated before, it's really just a mathematical formula based on what your valuation is and how much you want to raise, what it is you should be offering investors. So if you valued your company at $1 million and you're trying to raise $100,000, you just take that $100,000 and put it over 1 million, and essentially you're trying to give away 10% of your company in equity. So a lot of this is just about numbers, right? It's not pulling stuff out of thin air. It really does come down to knowing your numbers and knowing what your financial statements say, so you can get a valuation, and so you can sort of figure out what percentage you want to offer on your in exchange for your some equity in your company. But to answer your question, there is no minimum amount, there is no maximum amount, but that's separate and apart from the business advice I give clients about working all that out.
The next question is a great question from Destiny. What are the benefits of non-liquid investments other than saying you are a part owner? So I'll answer that from my point of view. In my research and with the conversations that I have had with people in equity crowdfunding and angel investing, which is kind of what we're doing as equity crowdfunders, and real estate are the two investments that have these types of returns. So statistically, it's been proven that, and I probably should show it to you here. Actually, let me do this because I pulled it up here. So statistically, it's been proven, like the S&P 500 averages about 8%. Most of us know this. Angel investing averages about 26%. Early stage venture capital, which is another form of what we're doing, averages anywhere from 10% to 46%. And then private equity is about 13%. So in a lot of investments that we're doing, if you build a portfolio, you can do very well with regards to annual returns. If you were to invest in real estate, that would be a liquid too. You can't just, tomorrow say, hey, I want to sell that investment property and get the money right away as well. So hopefully that's a clear answer, Destiny. Darshan or Tawana, do you have anything to add to that question?
Well, the question was the advantage of illiquid.
Outside of just saying you're an owner.
Oh, so yes. So I will tell you, in addition to the possibility of over average returns from the S&P index that you just pointed out, one of the really great reasons that a lot of my investors get involved with a lot of founders, or a lot of founders are really attracting investors, is because when you get in earlier, depending on your relationship and how much equity stake you have, you can really help form the company at the very beginning. You get to form the management about what you want to see. It's just more influence, right? Because you either have a bigger stake or because you're an early adopter. So for people who like coming up with ideas, who like to help companies grow their culture and what they're going to be moving forward, getting in early does give you an opportunity to do that, in addition to more than average returns. They might not be a big advantage to a lot of people, but I love startup businesses because I just love to see them grow and to offer advice. So for me, that would be a big draw. But for other people, they don't care. But that is one of the advantages that some investors have with getting invested early on.
Yeah, I love that you say that. I actually got a survey over the weekend from one of the investments that I'm in, and they were asking the community of investors what the next investment is. It's a real estate fund, and they were asking what the next investment should be. And there was a survey. So it was giving us an opportunity to give our opinion on how we wanted to move next, which as an investor, I didn't think that would have meant something to me prior to getting the survey. And then once I got it, I was like, this is the coolest thing. Like, yeah. And I didn't answer haphazardly. Like, I really thought about what should the next opportunity be. I felt like it was a privilege to be asked my opinion. Right. And so I didn't realize that would make me feel fulfilled, and it absolutely did.
Mm-hmm.
Yeah. Beulah has a question here. She says, my husband and I invested $500 in solar energy in the 90s, but it did not move. We thought we had done our due diligence. That made us shy away from investing. I have a challenge of doing my due diligence. What are some first steps? So this is an excellent question.
That's a really good question, and a great example of an industry, because in the 90s, it might not have been moving, but we know that now solar energy right now.
Yes, so you
have that investment.
you were early, and sometimes that happens. I mean, in robotics, for example, there were people who were investing in 2013, 14, 15, and now you're starting to see these robots doing acrobatic stuff and things like that. So sometimes it is you get in too early, we do have, Tawana, within the Knowledge Center, we have the 25 questions or 22 questions. I think it's 22 questions. 22 questions to ask the founder before, you make an investment. Obviously, it's not an all-inclusive list, but that gives you more of an understanding of the founder itself, as well as the industry, as well as the product or service itself. And Beulah saying, yes, we're following up. Good. Perfect.
Yeah. And if you go to investor.gov, they have a lot of good resources. They do a very good job of breaking down terms. They have all types of investment, financial literacy type webinars that they do. Obviously, it's a government website, so there's some limitations there. But the thing about an investment, and what makes an investment different than you going down to the bank to get a loan, or a loan on your home, is that it does involve risk. You're not taking out a loan, so it's not guaranteed by a piece of property or something that somebody can just take if you're not paying on it. And so you always have to remember that any investment is always going to have risk with it, more so in private markets than public markets, especially. And all you can do, again, I can't emphasize how important it is to come up with an investment strategy saying, these are the things that I am looking for that are most important to me. I'm going to check off and look for these things. I'm going to measure them and research them. And at the end of the day, if they don't fall in line with what I'm looking for based on my due diligence, then maybe I should just pass on it. And that I have learned by counseling private equity firms, venture firms, and individuals. If you can come up with an investment strategy for deals that you will invest in and deals that you won't, and stick to it, that is the best way to improve your chances of getting into some deals that will pay some fruition.
Yeah. And Raphael brings up a couple of good points, Beulah. He says here, even if you do your due diligence and it is a great idea, there are still no guarantees. That's why they said you need to have a portfolio. If you invest in 10 good ideas, one might blow up. So in the future, instead of $500 going to one company, it might be $50 going to 10 companies, or something like that. So Raf also asked a great question here. Is there a legal limit on unaccredited investors and how much they can invest on an annual basis? Tawana, I know this is your wheelhouse. So is Deshawn's as well. So
yeah, definitely Deshawn's, right? But yes, there is, and it's based on your net worth. So it's your income versus your debt. Unfortunately, does not include the value of your primary residence, which I think is the worst part of the rule, because that's where most of our wealth is in Black America, is in our homes. And so that doesn't count, unfortunately. But if you go on, actually, I think that is also on investor.gov, that information. They give a nice formulaic table that helps you do the math to figure out what your net worth is based on the rules, and then it lets you know how much you can invest. Also, all of the portals have built in to the system a way that they can also gather that information from you, and then they are able to then produce to you what your legal limit is. The problem is that the portals don't all communicate with one another, right? So you'll know, like, let's say you're able to invest $10,000 based on whatever your net worth is in a 12-month period. You need to keep track of that. So if you did $1,000 on a campaign in WeFund and you did $1,500 in a campaign on Start Engine, like, you've got to keep up with all of the math. But it's based on your income versus your debt and coming up with your net worth. So the formula is going to be different for all of us, right? Because we all have different net worth. Most people, I read this somewhere, Deshawn, you can tell me if I'm right, but most people are able to invest, like, was it $2,050 or something like that as the legal
25
limit?
is
So it's
25, but it's about 2,500. But
okay, and that's like if you make under 107,000 or something like that a year.
Let me tell you something. Let me tell you, the formula that they use is ridiculous. Okay, because they take the greater of your net income, your net worth or your income, and then it's a percentage of that, whichever one is greater. Like, I just don't understand why they don't give you a flat fee. Like, if you do crowdfunding in Georgia, if you're an accredited investor, you can invest in a limited amount. If you're an unaccredited investor, then you can raise up to 10,000. Pure, simple, like, streamlined. I don't understand why they.
I got one better. How about you let me decide what I can afford? How about that part? How about you consider me smart enough to know that I only have a certain amount of money to invest, and I know the risk, right? I understand that I could lose it. But if I think I've got if I only make $70,000 a year, but I'm one heck of a good saver, right? And I'm very judicious with my money, and I've got $70,000 extra or $20,000 extra a year that I could invest, let me do it. But when you do the math, if you only make $70,000, the odds that the SEC's formula is going to come back and say you can afford to do $20,000 is not going to happen. But they don't account for the fact that I may live a modest life because investing is more important than spending for me, right? Yeah. I may have a great savings account. They don't account for my behavior as an investor. That's the part that irritates me. They lump us all together. I know a whole lot of people that make a whole lot of money and they don't have disposable income, right? So making the money,
or the sophistication,
or the sophistication, right? So making the money is not the thing, but the the power in the making of the money. That's the part I don't like.
Right. They are expanding the definition of accredited investor. That's why I always tell people, if you are interested in democratizing both on the investor side and the founder side, sign up, go to sec.gov, right? I know this give me this nerd moment. Sign up for their e-newsletters because they have a small business capital formation committee that they have, and it meets regularly, and they are the ones that make the recommendations to the full SEC board. And I try to attend every meeting that I can and give input. As a matter of fact, I made sure they had a Black woman, because they didn't have a Black woman on that committee until I complained. Okay. So if you're interested in this, regulatory scheme and helping to expand what a definition of an accredited investor is, then make sure that you attend those meetings and get your voice heard, because to your point, it is very, very narrow. I'm an accredited investor because I have a Series 65, but I shouldn't have to get a 65 because of the type of work that I do. Like, why am I a securities attorney and you're trying to limit me? So to your point, it needs to be expanded. So, I always try to get people to stay involved in the regulatory side of it, because it's one thing to just go out there and invest your money. But remember, one regulation or one rule can stop all of that. So you got to keep on top of it.
Good point. Yeah. Good point. I will be joining the committee.
Yes. So Dennis is asking, are there other options like investing using an entity which may or may not be held to the same standard as an individual?
Yeah, you can use an entity to invest, and the rules vary. Like I'm a member of I'm the president of an investment club. And investment clubs have different rules for accreditation. So it definitely differs. And again, the SEC.gov's website is the best resource to go to understand what the latest and greatest information is around what those limits are for you.
Yeah. Well, I'm going to talk about my wish list for it, because Darshan had mentioned earlier about we talked about education, and Darshan had mentioned, the series of seminars that she had been doing, we've been doing within the 10K project, our weekly discussions with wealth builders. But I honestly think there needs to be like a milk it does a body good campaign, like blasted out to the Black community. And I think that awareness of what equity crowdfunding is would go up exponentially if something like that was done. So I'm putting it out there to the universe. I think that, that's really the way that people need to get introduced to it. It is something like that where people say, well, that sounds interesting. Let me find out more about that. And being able to tap into some short videos, just like, here's what it is, and here's how you can learn more, and just kind of get them further and further into the web of what we're doing. So, yeah. So, Tawana, I will offer you any final words you have.
So I wanted to tell you all what tomorrow's pitch was, because I thought about what the teaser could be. So it's Black Tech, and it is travel shopping made easier. So travel shopping made easier, Black Tech. It's an app. It's one that I'm going to be using because it's really cool. It's really cool.
I got a chance to look at it this week, and it is cool.
It's really cool.
Darshan?
No, just thank you for for the opportunity. One of the things that I'm going to be intentional about really next year is at these, invade the space of these companies that usually try to shut us out, or for whatever reason don't have representation. For example, we just had a conference down here in Georgia, Venture Atlanta, where all the venture capitalists come. and they meet with different founders to pitch and things like that. And I really wanted to get together some Black founders, and I did get together a group of Black women. I think one of them is pitching to you tomorrow because we had lunch last week. But having those intimate conversations where we can all be helpful, I think is going to be really, really important. So I'm going to try to be even more intentional about getting the word out about equity crowdfunding, but also to let people know generally what the lay of the land is in capital markets in general, both from an investing side and from a founder side, because there are many ways to raise capital in addition to equity crowdfunding, but making sure that people have, whatever all their options are so that they can make the best decision is one of my goals. And so I want to be more intentional about doing that for next year. But thank you for having me and letting me kickstart, my intentionality for 2023.
Fantastic.
Wonderful, wonderful.
Yeah, I mean,
and I'll
look,
just say one more thing, Cherie. If
sure.
anyone out there is thinking about investing in equity crowdfunding, there's no better time than now, right? Because this is the long game we're playing, right? So today's investment could mean something very profitable in 5 years, right? But if you wait 5 years, you're going to miss today's opportunity. So just think about that and become a member, the10kproject.com. Join us when we do our Bet on Black pitches. Join some of our masterminds. You have access to a knowledge center with easily over 1,000 hours of educational information that we've been putting together for the last 3.5 years now. And so, definitely worth the investment in us, and because it becomes an investment in yourself. And so, thank you to everyone who is already a member. I see so many of your names here in the participation list tonight. Thank you for always coming out and supporting us. Jen, welcome to the 10K family. Jen Glover said, just joined. That's what's up. Thank you, Jen. We welcome you. And I hope I see you tomorrow at the pitch tomorrow night. It's added to the list. You can come hang out with us. So super, super excited. For anyone who's not sure, keep coming to every Monday we come. We have amazing content that we share for free, right? You don't have to be a member to come to the Monday session. Keep coming, checking us out. See if we hold up to your criteria. And if we do, then maybe you join another time in the future. But we definitely want you to keep joining us because we could not do this without you. And trust me, I get letters and emails and calls from the founders all the time saying how much they appreciate the work we're doing. So to this community, this work is not in vain. This is meaningful work. You're going to look back on some of these things. You're going to see a product on the shelf that you invest in, and you're going to run up and down the aisle. Nobody will know what's going on, but you'll be so excited because you made that happen, right? You helped that founder get on that shelf. Tomorrow's founder, we're going to help him get his app launched, right? That work is meaningful. And some of these innovation, the innovation ideas that are coming across, they are literally life-changing. We had last week was an energy company. He's making access to energy in places where there isn't. Like, think about, underdeveloped countries where they don't have access to electricity. Young founder last week, he has built a solution for that and is making it happen for literally pennies on a dollar. So amazing work that we are doing in the Black community.
Black excellence all around, everybody. So everyone, you can catch up with Darshan. She's on LinkedIn all the time. So you can definitely catch up with her there. You also see her website there, kaag.co. She is also, don't forget, for some of you in Georgia, she is your elected representative as well. So, if you live in East DeKalb or South Gwinnett, your elected official. So congratulations to her for winning re-election to her seat in Georgia. And more importantly, tomorrow night, Bet on Black Pitch, everybody. So thank you so much. And we'll see you tomorrow at the Bet on Black Pitch.
Good night, Darshan. Thank you so much for joining us.
Thank you for
No
being
problem.
here.
Thank